Good morning. We're glad you decided to join us this morning. We're going to talk about budget and appropriations and encumbrances today. So I just kind of wanted to do a little bit of some housekeeping issues. We haven't seen you this week, auditors, so this is the first session for this week. Our next session with you will not be again until, it looks like, the 28th of January. We're going to bring in Department of Child Services to talk about some of the 4D grants and things like that. So you'll want to be sure to check in for that. We are working on the February sessions, so we're hoping to get that out by the end of the month. It will be done the same way. We'll notify you when it is up on the website, but it'll be up there. You'll be able to go get it. It'll have all the links to the sessions, the days, and the times for your affiliate group, okay? As of now, all packets are up on our website. I will put the packet in the chat box here shortly. We also have any recordings from last week are put there, so if you missed a recording, you can go back and watch anything from last week. We'll try and have these recordings put up by the end of the week, first thing Monday, but I will, if you just want to keep checking, we'll let you know when those are up there. I think that is all I have for housekeeping things. We're glad to see you today. So I'm going to turn it over to Lori, and she is going to talk to you today, again, about budgets, appropriations, and encumbrances.
Okay, so I'll go through my daily attempt to do this smoothly, and I'm going to share my screen, maybe.
So far, so good.
Start the PowerPoint.
You are on slide 15.
Well, I'm going to end the slideshow. How did I get on slide 15? I'll just move this back up to the top. Okay, start it again.
I think you need to click on one before you start it. Yep.
Ow! Could I make this any more difficult? Probably. As you can probably tell, technology is not my friend. We are barely speaking to each other. Okay.
Now you just need to swap the...
Okay, and my other box. Got boxes?
You got two more. There's one, and there's one at the bottom right.
Okay. I think I got all the
boxes
out of the way. Okay. Get ready to go. Okay, well, welcome. I hope this information is helpful. And again, I hope we don't have a whole lot of attendees today, so I'm hoping people watch it, the recording, and it's something you go back to and look at as you get more into the year. We're going to talk about budgets, appropriation, and encumbrances from State Board of Accounts point of view or audit position. Budgets, we'll talk a little bit later, preparing them. Auditors have a big role in that, and you will be getting training from DLGF on that, and that is not what we're talking about today. We're talking about what to do with the budgets once you have them. And so what is a budget? A budget is a tool that helps you track your finances, whether you're talking about your personal home budget or, more importantly for us, your departmental budget, and importantly for auditors, you've got a whole county budget to keep track of. It's a detailed plan of your anticipated income, the anticipated expenses for a given period of time, how you are going to get the expenses for the operations paid. So the budget of a government is a summary or plan of those intended revenues and expenditures for that particular government, for the county. Budget is recognized in GAAP as being a critical element of governmental planning, control, and evaluation process. Budgets are important. We can't emphasize that enough. An appropriation is the amount within the budget that has been allocated for that department, for that expense classification. You'll hear line items a lot when you're talking about appropriations. So those are things that are in the classifications of personal services, supplies, capital outlay, et cetera. When we talk about next month about receipts and claims, we'll get a little bit more on classification of expenses. But again, these are often called line items of appropriation. And this is just a portion of the overall budget, which has all of the appropriations for all of the departments and all of the funds in the county. An encumbrance, which we're going to talk about towards the end of the session, is the ability to hold some of those appropriations into a new budget year. So that's important too. Okay, so I said the budget process itself is under the oversight of the Department of Local Government Finance, the LGF. They have field reps that come out and help you work your way through this. They have training throughout the year on this that you will be receiving. And I'm not even touching that part of it. It is a very complicated process, and for auditors, you're going to be right in the thick of that. But from an SBOA perspective, once that budget is approved, we come in and audit your compliance with that budget. Did you follow that budget? Each office or department within the county, including the auditor's office, will have an operating budget, usually within the general fund. Some departments have them in other funds, public safety or MVH for highway. And then the budget is one of the main tools for the local governmental units to control spending. There are limited resources available to the county. You don't have unlimited funding. You're well aware of that. And so you have to allocate what you do have in the most efficient way possible to make sure that you are providing the services that your citizens are expecting you to provide. And those services include things like public safety, roads, highways, public health, and administrative functions. In this session, we're going to look at how those budgets impact the payment of county expenses that run through the claims audited and approved by your office. All claims that are paid have to run through the auditor's office to get paid. So again, budgeting is a process of setting those appropriations by line items for departments. So you'll often hear those words interchangeably. So the budget is the total of all appropriations for the county, and we're going to talk about both budgets and appropriations in this section. There is sometimes a confusion that you're going to hear probably from other elected officials or other department heads that, I don't need to budget this because it's not property tax money, and that's the only thing that has to be budgeted, and that is not true. All public funds from whatever source of revenue are public funds, and they are subject to budget. So that includes your local income tax, grants, fines, fees, bond proceeds, even donations. So just keep that in the back of your mind as you go forward. So the auditor's office is responsible for authorizing or auditing the claims to allow disbursement from county funds. And disbursement from those funds is controlled by two basic rules. One, you must have sufficient balance in the fund that is at least as large as the claim that is requesting. And the second, that there is sufficient unused appropriation that is also as large as the claim is reviewing. So if a claim comes in for $500 and there's only $400 in the fund, you don't have enough money. If the claim comes in for $500 and there's only $400 appropriation, you don't have sufficient appropriation. Both things have to be looked at. Okay. And that is something you want to keep in mind every time you get a claim, that you are looking at whether there is sufficient appropriation and sufficient fund balance. Now, this can become more complicated because if you're talking about general fund, you may have 10, 15, 20, 25 claims against the general fund. So you have to total those to see what's the total amount that's being claimed, and in total, do you have that money in general fund, as well as looking at the individual appropriations by department. If you determine that there is insufficient fund balance or insufficient unused appropriation to cover the claim, you should not pay that claim. So there is an exception for reimbursable grants, and we'll talk about that in a few minutes. But for claims where there is an insufficient fund balance, it would be necessary to find another fund that could pay the additional amount needed for that claim. So my example before, you received that claim for $500 from one of your special revenue funds, and you don't have $500. The fund balance is only $400. So at that point, you need to work with the person submitting the claim, the department head or their purchasing person or their accounts payable person, I can't talk today. Work with that person to determine, is there another fund that $100 can come from? Do they have another fund that is budgeted for their department? So it could be another special revenue fund. It could be the general fund. It might come from, you might have to go then. If not, you may have to look at going to the council for things like coming out of seated or riverboat or rainy day, depending on the circumstances. What you don't want to do is post the entire $500 to that original claim to that fund balance, because that will cause your fund balance to be $100 overdrawn. And this can result in a report finding, an audit result and comment in your finding, a written one. If you have operating funds that have overdrawn fund balances should never be below zero. Okay. The corrective action, when we're talking about internal controls, the corrective action for that would be to establish procedures so that you're reviewing each claim and series of claims from a fund to make sure that there is sufficient fund balance before you're paying those claims so that none of the funds are overdrawn. In the same way, if your claim is posted to an appropriation that does not have sufficient appropriation, if you post the full amount, you're going to have overspent that appropriation. You're going to have a negative appropriation line. Okay, so that can also be an audit finding because you've exceeded your appropriation. Whoops. I go too far. So again, you're going to have to work with the person that's filing the claim to see if there's another appropriation line they can use. We will discuss shortly the transferring appropriations between lines within a budget and other transfers, and also additional appropriations in a few minutes. So I realize it is not, and you may not yet, but you will, that it is not as simple as I present it. You're going to receive numerous claims. You have officials and department heads that are not always as cognizant of their fund balances and appropriations as they should be. In the best of all worlds, that claim that exceeds either the appropriation or the fund balance would be rare because the person submitting the claim has already checked this and has stayed within their budget. I know they tend to make a lot of department heads tend to make those disbursements and just leave it up to you to figure out how to pay it. I do believe if budgets are taken more seriously as one of those very important controls for county spending, everyone works hard to make their budget as reasonably workable as possible when you're putting the budgets together, and then everyone stays within that budget, it would avoid a lot of the conflicts. And unfortunately for the auditor's office, you're dead center in those conflicts. And I know that's not the real world, but I will continue to dream that it is possible. So in summary, you need money in the fund at your fund balance, and you need permission to spend the money, appropriation, before you can approve the claim. Also be careful not to confuse the two. They are two separate items, and they're not interchangeable. We often receive questions, Ricky and I will receive a question where it might start out saying, hey, there isn't sufficient appropriation, can I transfer money? Those are two separate questions. We have to go back and say, do you need additional appropriation or do you need additional fund balance? Those are two different questions, and every disbursement needs both. So you need to go back and be clear on what you're doing at a particular time. Theoretically, your budget should not be higher than your cash balance. In Indiana, they only approve fully funded budgets. However, budgeting is not an exact science. There are transactions that can take place after the budget is set that affect that cash balance. One of those is encumbrances, which we're going to discuss at the end of this session. But one of the things that you do is estimate your revenues for a particular fund. It's possible those revenues may not be received in the amount that you've estimated. There may be transfers of the cash fund balance, and so that the balance isn't what was included in the budget. There may be expenses that are made without appropriation, and we'll discuss those as well. So because of that, you cannot always rely on the fact that an unused appropriation does not signify that there is sufficient cash balance. You have to check both. And as I mentioned, we will be discussing when funds may be spent without an appropriation in a little bit. The permission to spend from those funds usually comes from the statute, and it may give an elected official the authority to spend without appropriation. We'll look at those. So our basic audit position comes directly from statute, and I've included the statute here. The county fiscal body shall appropriate money to be paid out of the county treasury, that is all county funds. Money may be paid out of the treasury only under an appropriation made by the fiscal body, except as otherwise provided by law. So what this is saying, for public funds, for your county funds, there should be an appropriation unless there is a specific statute that states an appropriation is not needed. The most common example for us that's readily recognizable for most people is the Recorder's Record Perpetuation Fund. Within that statute, it states the county recorder, so it's giving the authority to the recorder, the county recorder may use any money in this fund without appropriation for, and it goes on to list the uses. If the statute is silent, because there are funds that are set up by statute, if the statute is silent, then we're going back to this default position, 36-2-5-2, that says it has to be appropriated. Some statutes actually reinforce that an appropriation is needed, but if it's a disbursement without appropriation, we are going to be looking for specific statutory language that says it can be spent without appropriation. Okay? This also means that home ruled funds require appropriation. Those are county funds, so they do require appropriation. The October 2017 County Bulletin has a list of instances where an appropriation is not required. It's not an exhaustive list, and you should always check the statute that established the fund to determine if the funds can be dispersed without appropriation. I've included in your handout, in your packet, at the end of the slide PDF, I've included that article in there, so you don't have to go look for it. You can look for it on our website, but I've included the information on there. So the first list is the funds that can be, or the times that you can spend without an appropriation. And then there's a second list within that article that are funds that can be dispersed with an appropriation by council only and does not require the additional appropriation procedures and approval by DLGF. And again, as a note for clarification, the appropriation or permission to spend does not mean that you can just spend it on anything. There are still restrictions. The Special Revenue Fund is set up for a specific purpose, so there are specific things that can be spent. Even with the Recorder's Perpetuation Fund, may be spent without appropriation, but their statute specifically says what it may be spent on. So it's not a free-for-all in that case, so do remember that. I did it again. The chart of accounts, which we gave you in a handout in December in one of your packets, does have this, one of the fund descriptions has the statutory funds in the first section in the column, and the next to it, it lists the statute. So if you have a question whether an appropriation is needed or not, or what are the specific uses allowed for those funds, you can look that, gives you that statute, you can look that statute up specifically. If you have any questions, feel free to call and we'll help you with that. So there is a general place where the statute does provide otherwise, and that is in 36-2-9-14. And 9 is the Auditor Statute. And it lists specific things that you can spend money without an appropriation, and that's incorporated into the list that is in there. Okay. So this includes things like refunds of money that you've received, distributions of monies to other taxing units, special assessments that are like drainage assessments that are for a specific purpose. You can go through the statute, and again, you go through the list, but those kinds of things. But that is included specifically in statute. And I already talked about the chart of accounts, and again, it lists all of the statutes that specifically address those funds, that set up those funds, so you can look there as well. And then again, remember, there are some situations where you have to have an appropriation, but the appropriation can be done by council within the county only. It doesn't have to go through DLGF approval. Okay. Indiana Code 36-2-5 is the budgeting for counties, and that's what you're going to be dealing with when you're doing your actual budget. And again, you're going to get more training on that from DLGF. There is also a statute for budgeting for all political units within taxing statutes, and that's in 6-1.1, 17, and 18. And I've put on this slide the 6.1.1.18.1, which talks about advertising, publishing that budget. Okay. This particular subsection states that budgets must be published, and any part of the budget that is higher than the published amount is void. So we often get questions, what has to be published? Looking at the statute and speaking with DLGF, our audit position would be the entire budget does need to be published, and if you make changes to increase the budget above what has been published, you do need to provide notice of those changes. If you don't have a budget for a fund during the year, and then you decide to spend from that fund, you would need to follow additional appropriations for those funds, and those additional appropriations have to be advertised. For any funds that have a specific property tax rate, DLGF must calculate and certify the budget for those funds, and so they have that extra level of oversight and approval. One of the compliance items that we audit for is that the expenditures for the year did not exceed the amount certified in the budget or amended by additional appropriations. Okay, so this can be a finding in your audit report. Again, if you have controls in place to review the unused appropriation before you approve claims, you can avoid this finding. We often do this at the fund level and may not go down to the department level, which does not mean that department level budgets are not important. They are very important. But we do look at the total disbursements and compare it to what was approved, and then add any additional appropriations. We make adjustments for transfers and encumbrances, but if overall you spent more than was approved by your budget, that is going to end up being an audit finding in your report. And as I said earlier, budgeting is not an exact science. It's possible to set a budget and have been very careful and thorough in getting this budget together and still have insufficient appropriation, that the budget doesn't cover everything. Things can happen. You can have a really bad winter and you did not budget for enough for snow removal, things like that. You could have a natural disaster that takes out a road that you didn't anticipate filling. I mean, these are big things, but there are little things. You may have some sort of COVID is an example. Apparently nobody budgeted for COVID. We had no idea that our health department would be stressed so much, that our first responders, that our police, that our public safety would all have to work as hard as they did or put in as much overtime as they did. These kinds of things cannot always be anticipated, and so there are procedures in place for additional appropriations. What we don't want to do, what we want to avoid as you work through this, and this is up to the departments and the council, again, you kind of help coordinate this budget process, but it's really up to them to make sure they're not doing kind of a haphazard job at budgeting, that they're thinking, oh, well, if I just, do additional appropriations later. They need to be as careful as possible to determine what they actually need and try to stay within that budget. But if you determine, if a department determines they do not have sufficient money in their budget to provide the services that they need to provide, then they come to the council for an additional appropriation, and council can approve that. That does have to be advertised. Okay, there has to be a public hearing on that. You have to publish or notify your public of that hearing within 10 days before the hearing. Then if it's a property tax fund or MVH or local road and street, then that has to go to DLGF for approval. They have to certify the additional appropriation before you can spend it. If it's not one of those funds, then you just report it to DLGF and they just note it that you've amended your budget, but it doesn't have the approval process. Now, DLGF has amended or has automated, I didn't mean to amended, but they have automated their additional appropriation process. It is now done online. It can happen very quickly. Obviously, advertising and then public meetings still takes time, but the approval process has been streamlined starting, I think last year they put it in place, so it's definitely in place this year. Another method for dealing with insufficient appropriation is the transfer of appropriation. So if the transfer is within the same department budget and same classification, if county policy allows, the county auditor can make that transfer. So an example of that would be, so a department within the general fund has several lines within their supplies budget, and they want to transfer from one of those lines to another line. Within the classification of supplies, it's within their budget. So as long as the county's policy allows the auditor to do that without council approval, the auditor just go ahead and make that transfer of the appropriation. Okay. However, if they're transferring it between budget classifications, so they want to move something in their supplies line, reduce something in their supplies line and move it to capital outlay or personal services, that requires council approval, okay? The auditor can't just do that on their own. And that really makes sense when you're thinking about it. In the first place, you've determined that your overall budget was inadequate within your classification, so that needs to be taken into consideration when you're making the next year's budget. Do you need to continue to allocate differently within the classifications? Do you need more in one area? What caused it? Is that going on? So it makes sense that the council needs to be aware that the overall budget for that department has changed. Okay. Now, if the transfer is across departmental budgets, this not only requires the approval of the council, but also DLGF. Okay. In this case, for whatever reason, the department budget is not sufficient and requires additional appropriation, even if the appropriation comes from another department within the fund. So, like within general fund, if your office thinks, well, I haven't used this money in my supply line, I'm not going to, and the treasurer needs that money, so what doesn't affect the overall budget, it's still between departments, and so the council has to approve it, and then they're going to have to reduce the appropriation in the one budget, in my example, the auditor's budget, and increase the appropriation, do an additional appropriation in the other department's budget, and then DLGF has to approve that. So that's a little more complicated when you're moving it between departments within the fund. And again, remember that there should be, for the council and for the department heads, a high level understanding of their budget. Every additional appropriation should have a reason. You should know what those reasons are. They should be incorporated in developing future budgets. It's possible for an emergency to occur. We've talked about several examples, COVID being the perfect one. Or it could be that you anticipated your revenues very conservatively, and there's more revenue, and you have needs that that revenue might be used for. So you might get a federal grant you weren't anticipating, and so you might need additional appropriation for that. But you always need to be aware of how that affects your budget and why you're doing that increase. Okay. We get a lot of questions on transferring between funds. And the State Board of Accounts prescribes the use of fund accounting. That's what your funds ledger is based on. And that's to provide accountability for the governmental activities and your financial status. What that means is that individual funds are used to segregate financial activity based on sources and uses of those funds. The permanent transfer of money from one fund to another clouds the transparency provided by fund accounting, should be infrequent, such as when specifically authorized by statute. And instead of transferring money from one fund to another, the appropriation should be transferred to the fund that has the available money. This way, the use of money in the fund remains transparent. So our audit position is you should not be transferring money from one fund to another unless there is statutory authority to make that transfer. The most common one that you're going to run into is your rainy day statute, and I've listed a statute here. And if you go to that statute, it specifically says in there, in a fiscal year, a political subdivision may at any time do the following: transfer any unused and unencumbered funds specified in the subsection B2A from any fiscal year to the rainy day fund. Okay, and it goes on to list some other funds that may be transferred. Okay, and then some limitations. You can't transfer from a debt fund. So a lot of times we'll be asked, hey, there's not enough money in this fund. Can I transfer money? You should be spending the money from the fund it was assigned to, okay, unless there is specific statutory authority to to transfer it. If we've run into a lot of that with the grant funding coming forward, so you may be looking at a lot of that when you're looking at your putting together your 2019 AFR and seeing the movement of funds there. But it should not be routine. It should be very rare to make transfers from one fund balance to another. So there are some exceptions in statute for the additional appropriation requirements. And those additional appropriation requirements are in 6-1.1-18. The first one is insurance payments, and that has been expanded to include a payment from any individual. But if there has been damage to a county-owned asset and payment is made in restitution for that damage, either from an insurance company or if an individual damaged a county asset and just pays the money in to restore that asset or repair it, the auditor can approve the appropriation of these funds as long as they were received first as a result of damage to the property, and those funds are going to be appropriated to repair or replace the damage that was done. So it still requires appropriation, but in this case, the auditor has the authority to do that. If you get funds in for, have a vehicle damaged and you get an insurance settlement to repair that vehicle, if the county decides not to make the repairs of that vehicle, then that money just goes into the fund and it needs to be appropriated by council. It's only if you are actually going to make the repairs to that vehicle that the auditor can appropriate that fund to align for those repairs and then go ahead and pay that claim when it comes in. Okay? And there is a time limit. It has to be done within 12 months of when that money is received. When a county receives reimbursement of costs from a state or federal grant, and we're going to talk about reimbursement grants in a little bit, they do not have to follow additional appropriation procedures. The council, again, it does require appropriation, but the council may appropriate those reimbursement funds. Okay? If the county has issued erroneous or excessive disbursements, so you've paid a claim twice to a vendor, for example, you've discovered the error in the same budget year. That means that you issued it in February and you found it in June. Okay, not you issued it in June and you didn't find it till February of the next year. It has to be in the same budget year between January and December. Okay, you can, and you get a refund back from the vendor or whoever you sent the money to. They send you the money back. You paid this twice. That can be reappropriated. You basically, and it makes sense. You spent money you shouldn't have. It just goes back in the fund, and the reappropriation goes back to make it available to spend. So it restores the budget. If it is not received in the same budget year, in a subsequent budget year, it's going to go back in the fund, but it's going to have to be appropriated at that time. It's going to have to go through normal appropriation processes. Grants. We're going to have a lot more training as we go forward on grants, so this is not your be-all and end-all on grants, but this is going to be kind of an overview. All of your counties got federal grants last year because of COVID, because of the CARES money, so you're all going to be dealing with that this year. Basically, your grants come in two forms. You have an advance grant or a reimbursement grant. In the advance grant, the grantor agency gives you the full grant up front or a portion of the grant each month, depending on the grant agreement. The key to this is that the grant funds are advanced to the county in order for them to fulfill the purpose, to make the purchases, to do whatever the grant was set up to do. Federal grants, they can come directly from the federal government. Those aren't real common, but they do exist. They're called direct grants, or they can pass through a state agency, and those are your more common grants. They're coming, it's federal dollars, but they're flowing through the state. Few federal grants are advanced grants, but there are some that do exist. As an illustration, suppose there's you get a grant to purchase equipment for your sheriff's department, and they send you the full grant amount. Okay, you're going to purchase this particular piece of equipment. Here's the money you need to do that. If they send you the money, you purchase the agreement, or you purchase the equipment after you get the money, that's an advance grant, okay? The reverse of those are reimbursement grants. In that case, it's telling you, you purchased that equipment, send us the claim to prove you purchased that equipment. We'll reimburse your purchase. That's a reimbursable grant, and that is probably most of the grants that you have. Okay. If you receive an advance grant, and again, those are going to be rare, they do exist, however, the grant agreement is your permission to spend and takes the place of the appropriation in this case. It specifically tells you what the money, the grant is for and what it is to be spent on. Okay. The amount that you can spend is limited to the grant. It's only what you've received. You can't overspend because you're only getting that dollar amount. Okay. So if you get an advance grant for $10,000 to purchase dive equipment for a water rescue, then the grant agreement limits your purchase to $10,000. That's the most you can spend. If the dive equipment costs more than that, you're going to have an appropriation, and it's going to be a county expense for the rest of that. Okay. And again, if a grant match requires a local match, it says, hey, we'll pay 80%, you got to pay 20%. That 20% that's coming from the county still requires an appropriation. State grants do require appropriation. If the grant allows you to fund or partially fund operations of the county, it's important the revenue supplied by the grant be included in your overall county budget so your county can determine how much additional county funds will be needed to fund that particular operation. And that's why we say the state grant should be appropriated. For example, if you get some money for operating your jail, it's not going to operate the whole jail. And so you want to include that in the county's overall budget for the jail. You want to know how much is going to be paid by this grant, but you need to know, your county needs to know, your council needs to know how much additional money is it going to take and make sure you have sufficient appropriations. So you want all of that included in the budget. If you receive an advance grant from the state, that grant agreement provides a detailed budget by major classification of expense, and you spend the funds in compliance with that budget, we will not take audit exception that it has not been appropriated. So an example of this would be like the Community Corrections Grant, which comes through the state. It is given, I think, 1/12 or something they give you each month. And they have a specific budget by personal services, supplies, the same budget classifications we use. So they give you a budget, more or less, when they give you the grant. So we will not take exception if that has not been appropriated by the council. It should be, but we're not going to take exception for that. For a federal grant, if it is a reimbursement grant, again, you're spending, and for state grant, you're spending your county money first. That requires an appropriation. So you have to keep that in mind. If, the one way to think about it is if you, for a reimbursable grant, they can deny that reimbursement. You may not meet all the qualifications for that. So it has to come from somewhere. So you have to have an appropriation to spend any county money, even if it is going to be reimbursed later by a federal grant. Okay, I started in on this, I guess. So for a reimbursement grant, both federal funds and state funds, rather than receiving the grant money up front, the county must first spend from county funds for those allowable costs and then submit the claims with documentation the amount to receive a reimbursement of that expense from the grant funds. The CARES funding that y'all received, all your counties received in 2019 was a reimbursement grant. In order to make the initial disbursements, you need an appropriation of the county funds. So even if you post the expense to the grant fund and there is no fund balance, which means you're going to have a negative fund balance, we will not take exception to that, and I'll go over that in a little bit. You still need an appropriation to make the disbursement. I know this is confusing. Technically, the correct accounting procedure for a reimbursement grant is to advance funds to the county from another fund, such as the general fund, as a temporary interfund loan. When the reimbursement is received, the interfund loan is repaid, which brings the fund balance back to zero. That's a lot of work. Depending on how many reimbursements you request, this becomes a very complicated process. So we have stated we would not take audit exception to a reimbursement grant being overdrawn for a short period of time. So the reimbursement grant fund balance is in the red for a short period of time as long as you are requesting the grant reimbursements in a timely manner and you are just waiting on that reimbursement to come back in. Okay, this is not technically correct, but it is a more efficient way to account for reimbursement grants. However, if it helps you to think about this the technically correct way, because you need an appropriation to spend the money from the general fund, even if you're not posting it that way, in effect you are borrowing from that fund to make the initial disbursement, and that does require an appropriation. Okay. On the flip side of that, if the cost is determined not to be an allowable cost by your grantor agency and they deny your reimbursement request, or it's outside of the allowable period of participation or some other reason they say, no, we're not going to reimburse, then that original payment that when you put it in the reimbursable grant fund, once you're notified that's not going to be reimbursed, that expense needs to be moved to another fund that will bear the cost of that, probably the general fund, but it might be another fund depending on what the cost is. Once that reimbursement is received, as we talked, it can be reappropriated by the council without additional appropriation procedures so that you can continue on with that grant. And again, grants are complicated. This isn't enough to give you everything you need to know about them. I just wanted to talk about them in relation to budgeting. Now we're going to talk a little bit about encumbrances, and you may be dealing right in the middle of that this month since you took office, because this is when we're dealing with them, the end of the year transactions. So encumbrance is an accounting concept. You're not going to find it in statute. It's accounting. You set your budget for the year. So you're coming into the end of the year, and because, again, budgeting is not an exact science, you may find that you have unused appropriation in some of your appropriation lines. Okay? You may also have expenses that have been incurred prior to the end of the year that may not get paid before the end of the year due to the timing of your accounts payable. You get the claim late in the month. You've already done all of your accounts payable for December. And so you have this payment that now is going to be held over and paid in January of the following year. What the encumbrance does is allow you to take the unused appropriation, so something that's left in that line item, and the amount needed for that specific claim, and encumber it so that when the claim is paid in January, rather than using your 2021 budget, you're actually allowed to use that encumbrance from the 2020 budget. So let me try to illustrate that a little bit. I know that's kind of cumbersome. So let's say you have a claim come in late December for $200, and you're not going to process any more claims for December. So this claim is going to be paid in January. So you look at your 2020 budget, and you have a line item for this item, say it was supplies, and supplies line for this department. Let's say it was the health department, and it still has $200 left in the unused appropriation. So you encumber that $200. Okay. But this is an accounting term. You're actually doing an extension of the appropriation. Okay. So when the claim is paid in January, instead of posting it against the 2021 budget for supplies, you go back to this encumbrance and you clear it out by posting the $200 against the encumbrance. That zeroes out your encumbrance, but it also posts this to your 2021 budget, okay, 2020 budget, even though you're paying it in 2021. Each county should have a policy, and since you're the auditor, you're probably going to have to push to get this for encumbrances. These are usually done in December because that's when you know if you have claims that aren't going to be able to get paid by the end of the year, that you have specific items that you have left in your budget to pay for those. They should be included in the council minutes. The council should be aware of this. A copy is sent to DLGF because it is an impact on the budget itself. So how they do that, encumbrances affect the budget because they reduce the cash balance in the fund. And that cash balance may have been part of the determination for your subsequent year's budget. And as we have discussed, you need both the appropriation and the cash balance to disperse funds. So if you're changing that cash balance, that's why council needs to be aware, auditor needs to be aware, DLGF needs to be aware that those changes have been made. Here's a little fun fact I will share with you, which most of your department heads will not accept. Just because an unused appropriation exists, there is no requirement to use it, okay? Appropriations are estimates of what the operations, including capital projects, debt services, costs are going to be needed for each department, for each fund for the next year. No matter how good you are at estimating, you're not going to be exact. Hence, you're going to have a need for additional appropriations, and we've talked about those, or transfers. And again, you might have overestimated, and you may have more appropriation than you need. Okay, so let's say in our example earlier, maybe you had a bad winter the year before, and so you upped your estimation for road salt. This year you didn't need as much, so that line has an unused appropriation in it. It does not have to be spent. Okay. The appropriation is not the cash balance. It's not like you're losing money if you don't spend the appropriation. Any unused appropriation expires at the end of the budget year if it's not encumbered, and that amount of the fund balance has been set aside by that appropriation now reverts back to the unappropriated fund balance. Okay, so I'm going to try to illustrate this again. So let's say an example, your general fund for all your departments together. I'm going to stop doing that. So your general fund, all your departmental budgets together, and you've allocated to each, but the total balance, the total fund is $1.5 million. Okay, or I'm sorry, the total fund balance is $1.5 million, and you budget $1 million of that. So you've left $500,000 as unappropriated, just as a reserve, but you budgeted $1 million of that. At the end of the year, for all your departments, again, I'm not doing it by line item, all the expenses are paid for. Okay, and you find there's $50,000 of the budget that was not been used. $50,000 of appropriations was not spent. Okay, so now that unused appropriation, that $50,000, reverts to the general fund balance, and so the unappropriated. So now instead of $500,000, we have $550,000. I'm ignoring revenue for this example. Obviously, it's not this simple, but ignoring revenue coming in, you now have $550,000. The money isn't gone. It's just that the appropriation, the allocation of that, reverts back to the unused balance. It's now available for use next year. Okay. The problem comes in is that it's in the unallocated, unappropriated balance, which means it belongs to no one department. So maybe it was the highway department that had that $50,000 of unused appropriation. They don't automatically get it next year. They could. The council could decide to increase their budget for the next year by $50,000, but that's going to be a council decision. It does not automatically go to the department that did not spend all of their appropriation. And that is why your department heads more than likely will try to find reasons to spend all of their appropriations before year end. So back to our encumbrances. So if there are expenses that have been incurred but not paid, it's possible to carry that portion of the unused appropriation. So in our example, we had $50,000. Well, let's say there were expenses that had been incurred in this year that had not been paid. So we look at that $50,000 and see if we can encumber any portion of that into the next budget year. Okay. Then again, when the claims for those are paid, those are earmarked as being against the encumbered amount. So when those are paid, it's going to reduce that $50,000 of encumbrance. Okay. And what that does means it's not using $50,000 of the next year's budget. It leaves that budget whole for the next year's expenses. So in order to encumber, there has to be an expense. You cannot roll over your entire, although your department heads will try, you cannot roll over your entire unused appropriation to the next year simply because it wasn't spent in the current year. It doesn't work that way. There has to be an expense incurred in the current year that needs to be paid in order for you to encumber. And you can only encumber unused appropriations. So if your department head has used every penny of their appropriation and they give you an encumbrance, it doesn't work that way. There has to be an unused appropriation to encumber. So any claims are going to be paid, even if they were incurred in December. If they're paid in January, they're going against their 2021 budget because there was nothing to encumber from 2020. The encumbrances, again, the council needs to be aware of that. So we suggest that the list be provided to council, be made a part of their minutes so that they are aware for the subsequent budget year what impact these encumbrances might have. And they are the ones, along with the department heads, that should truly know whether there is other things that might impact whether something should be encumbered so that they can look these over and make sure they're valid. For example, let's say a department is given permission to purchase equipment costing $50,000, but it doesn't get done before the end of the year. And it's possible that council is aware of that, and they add that $50,000 to the subsequent year's budget because they know that cost still has to become. It's still going to be coming up. That equipment still needs to be purchased. So you do not need to encumber from this year because it's already been included in next year. So those decisions are item by item or line by line have to be determined to make sure that the encumbrance is appropriate. And here are the reasons when we're auditing that we look for that support those encumbrances. Okay? And these should be documented by your department, so they should be part of your list. So if the county has entered into a lawful contract, the contract has not been paid in full, and the remaining portion of the contract may be encumbered. Again, for example, the county enters into a contract to complete a project, and at the end of the year, only 75% of the contract's been paid. The remaining 25% of the contract that is still due may be encumbered, even if it hasn't been invoiced yet, because you know it's still due, and it's a contract that was entered into in the current year. But again, your council's going to be aware of this. If they've already built that 25% into next year's budget, it wouldn't need the encumbrance. So you need to be aware of both sides of that. If your county uses purchase orders are a way of really kind of encumbering funds during the year, so that you're saying, I am going to purchase this piece of equipment or these supplies. It's going to cost X number of dollars, and that sets aside part of your appropriation for that, so that you can keep track that when that claim comes in, I already know I can't spend this because I've already committed it to another purchase. So if you're using purchase orders, then and those purchase orders have been approved and they've gone through all the official approval, and if there is sufficient fund balance and appropriation, you can encumber based on that purchase order. Okay. And we've already talked about invoices are kind of the same thing. You actually have received the claim, but you just can't pay it in December. That can be encumbered. We get asked about payroll. We will not take audit exception if payroll is encumbered. Again, you need to be aware of how payroll was budgeted to know whether it was included, the last few weeks of the month, were they included in this budget or they included in the next budget. So we're not going to take exception. Make sure you're aware of how your payroll was actually determined, so you know whether you need to encumber or not. Okay. When bond proceeds are received, then the county appropriates those bonds. The council is going to appropriate that for the capital project for whatever was issued. You get bond proceeds to renovate the jail, then the council is going to appropriate all of those proceeds for that project, the renovation of the jail. This only needs to be done one time, even for a multi-year project. the unused appropriation just rolls forward until that project is completed. Now, if the project is completed and there's still an unused portion, that would need to be reappropriated for a new project. And also, if you have appropriation made for a local match for a grant, so you've obligated, you've entered into a grant agreement, you've agreed to pay like the 20%, they'll pay the 80%. If that is executed before the end of the year, that appropriation can also roll forward. You don't have to reappropriate it at the new year. And I know I've gone over a lot, and this can be very confusing. We get a lot of questions on this, and that's no problem. We're always here to answer questions, and don't hesitate to ask. And maybe your specific situation doesn't seem clear in what I've given, so we'd be glad to help you brainstorm through it. But it is a very important part of the whole claims processing, budgeting that falls on the auditor's office. So this information is extremely important. And I will stop sharing now if I can figure out how to do that.
I am going to give you control of your cameras and your microphones. Okay, so now you are able to ask any questions. Just say hi if you want to say hi. Anything, the floor is open.
And these are all in shock again.
No.
Why did I do this?
Hi, guys.
Hi.
Hi, Tammy.
Well, I'm going to be honest with you. I was a little late getting on, but I had to take care of some issues. But the grants, they're
oh, yeah.
a little crazy. I mean, from what little I know about them from the previous auditor that was in here, oh my gosh, I think I'm going to really struggle with that. So I'm going to be glad that you guys are going to put on something for us to go by. And then, because I think I've already reached out in a question on a grant already for a reimbursement and how to set a new fund up for that. But it's just crazy. So I'm looking forward to learning more about grants. Who knows, in the next 4 years, I might be a grant expert.
You probably will be. Yeah, the CARES grant, the money that came through the federal government because of COVID, was in some ways very problematic in what I'm sure your predecessor auditor has told you, because the money came in and the rules kind of followed weeks to months after the money was already there. And so we're going to be auditing a lot of units that have never been audited for grants before because of just the volume of it. And, you needed it. I mean, we were dealing with just unprecedented disaster. And so,
We'll deal with it.
Yep. It'll all work in the end.
It'll all work out.
My dog came to say hi.
Oh.
He's actually looking out the window. But, if you could see him. He's really cute. Although, I mean, let's be honest. There are some dogs that are just so ugly, they are cute. But anyway. Sorry, I decided to interject a little fun in there. Well, if you guys don't have any further questions, we can let you go for the day. We hope to see you back. I know I said earlier, but I never remember there's so many that we're putting on. It looks like the next time we will see the auditors will be on Thursday, the 28th of January, which is for the DCS, Department of Child Services. And then we are, like I said, gathering sessions for February. We plan on running these newly elected through February. And then you'll transfer kind of over into our other conferences. So we really do appreciate you taking your time today, coming, listening. We have recorded the entire session. It will be put up on the website. so you can go back and refer to it at a later point. If you have a question about what exactly did Lori say, what is an encumbrance, those kinds of things, it will be there. And if it still is a little unclear or you're unsure about some specific issue, give us a call, email us. Either way, we will be more than happy to talk you through it and help you out. Okay. Well, again, thank you, and we will see you later. Have a good afternoon.
Bye, ladies.
Bye.